Okay, good morning, traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, March 8th, ECB day. Certainly, we have Mario Draghi just taking the microphone right now. Obviously, the ECB held rates as expected, guys. They did leave out a specific statement with regards to adding further QE accommodations if conditions warranted. They removed that statement. Markets are taking that as a cue that the central bank would be likely more likely, I should say, on the path of normalization more so than anything else. So you're seeing a little bit of a pop here in the euro, and I will be giving you comments as it hits the wires here. I'm be monitoring Draghi's comments saying data confirms strong broad-based momentum. Reinvestment will help deliver appropriate monetary stance, QE to run until ECB sees sustained, inflation adjustment. Says economy to grow faster than previously forecasted. Strong momentum boosts confidence in inflation pickup. Okay, I'll try to give you the highlights as they cross the wires, but good to be with you guys here this morning. DJ, Eman, Joe, Peter, Pete's in the house, Pooja, great to see you guys here to wrap up the week. So on the menu for today, obviously we're going to start off with the euro. We'll circle back and take a look at the DXY and what that's doing. Both of them kind of stuck right now in real near-term ranges. So very attentive to how this materializes into the U.S. Open. British pound, very similar scenario. I still think we can get a pop higher, but kind of drifting, losing some steam here near the highs. Aussie yen, we covered that yesterday. Euro CAD, nice initial touch off that key resistance region. So pullback also looking very possible there. We'll touch on dollar yen, Aussie dollar, euro yen. I know we were following that here in the room as well. Dollar CAD. Remember, tomorrow we have not only the U.S. non-farm payroll report, guys, but we also do get the release of Canada employment information. Huge disappointment last month with a print of negative 88,000 jobs, right? So certainly when we get these NFP Fridays where it's a double whammy NFP and Canadian employment figures, dollar CAD becomes a central focus for us. So we'll definitely take a look at what dollar CAD's doing. We'll wrap up with Euro Kiwi, a trade I presented earlier this week, and gold. Still stuck in its little range there too, but certainly things still continue to look pretty constructive on that end. Okay, that's everything that's on my list. Any other questions that you'd like or for setups, feel free. Iman, good morning to you as well. Can we have a quick update on Kiwi? Sure. So I actually haven't been following Kiwi because I'll show you the weekly chart, and that's what's bothering me, but we'll take a look at Kiwi for Iman. Gotcha. Okay. Let's jump right in. Draghi is saying some more comments here, saying rising employment bolsters private consumption, favorable financing conditions to help investment, policy measures support domestic demand, economy momentum is still strong and broad-based. So again, pretty rosy picture here, more so just kind of fluff. I'll let you know if anything important crosses the wires, but quick look at where we are in the euro. So here's what it looked like last night as we came into the start of the session of Asia. You know, we came off of this slope here. Let me show you this first on the weekly chart. So the broader picture for euro, right? We broke above this upper parallel. We were talking about this being support, bullish invalidation for the uptrend, still 121.67. So we were looking for this bounce to see if this consolidation region breaks to the upside. Ultimately, 25.98, basically 26 is what I told you guys. Kind of a big region. You have that basic trendline resistance off the 2008 highs. You have a 618 retracement just from the decline off the 2014 highs. So kind of the broader picture here, right? Going into the daily chart, the level that I was looking at was 2409. That was the 2018 high day close. We just made that last month on the 16th. High day reversal close. It was also the February open and the same slope we've been following, okay? Again, recall, this is a basic slope support off of 2017's April low. It's the same exact slope if you take just this trend line. And the parallels of those have continued to offer some very nice pivots in price. So, you know, yesterday we were probing through that, pulled back. The ideal scenario that I mentioned last night was if we were to get a jackknife reaction lower for some sort of entry down here, try to get that topside break. At the end of the day, we made a 4-hour reversal off the highs, and this was my concern for the pullback. Here's a 4-hour reversal off the lows. So 2461 It's going to be that 764 retracement. That's sort of a breakout target. I think if you get through that, look for 25.38. That's just the swing high that we made from back in January. We tested that last month and it failed. Okay, so that would be sort of the top side resistance level. But as far as levels are concerned from yesterday, unchanged. Okay, here's what the update looked like. Again, give me the 120 minute. And here's what we look like now. So you got the pullback turn just ahead of 23.55. Here's the top side move. If you're not in this already, guys, unfortunately, there's nothing to do here. Draghi is saying inflation to hover around 1.5% for the rest of the year. So essentially citing that expectations that we're going to run below the inflation target. But it's really, guys, as far as the statements, sorry, I'm just reading some commentary here. As far as the statements are concerned, as long, the biggest thing that markets are running with is the fact that they omitted the fact that they will be willing to implement further QE measures if needed. And that kind of takes alleviation a little bit off the euro. Remember, all these QE measures are inflationary. They also tend to dilute the domestic currency, and this is something that's seen as a negative, right, a bearish thing. So if there's going to be sort of the cutoff where we're not even getting that offer anymore, where the central bank is willing to inject more liquidity, a little bit of an alleviation here. At the end of the day, resistance is resistance. So checking the weekly range highs, I still have that pivot there. I'd be watching just 24.61. If we get through that, look for resumption. Any questions on euro, where we stand here? The broader focus is higher. It's just that we've rallied now for 6 consecutive days. It's kind of tough for me to advocate anything on the long side from these levels. If you got a decent entry on the way up here just now, stop against the low is the only way I'd play it, right? Other than that, I think you have to wait on this one to get re-entry if you're not in it. ECB trims 2019 inflation forecast to 1.4%, keeps 2020 at 1.7%. Euro holds near highs as Draghi cites FX downside risk. Okay, so he did note that the FX downside risk as far as volatility in the euro. Risks to euro area growth broadly balanced. Downside risks related to global factors and the FX markets. Okay. All right. If there are no other questions here on the euro, I'm going to take a quick segue real quick and just look at Euro CAD. This is another one that we looked at yesterday, and this is the one that I favored, guys, on the fade move if we were going to see a euro weaker story today. Here's Euro CAD. I haven't really been presenting the intraday chart because there's really not much to look at. This has been the main focus for me, and it's the weekly. The daily. Basic median line formation off of last year's lows, last year's high that we made in June, the subsequent low that we made in September. Very clean on the median lines. Here's the upper parallel near-term channel resistance, also converging right there. 2016 swing high, also right there. It's basically the 6105 level. So yesterday we probed right into that. The high was 6122, pulled back. The initial touch looked great. And as I noted yesterday, sort of the ideal scenario, guys, before you start to play a turn, this is kind of a good lesson in how do you just approach an uptrend approaching resistance, right? So we've had a day where we saw a probe into the key resistance range and it pulled back. Before you just jump into a trade blindly, we want to see that final approach and failure. And that's what I kind of noted last night that I was looking for in Euro CAD to see if we can get one more approach and try to pull back. The 4 hour, as I noted, we had a 4 hour reversal bar, okay, right off the highs here that took us lower. So basically the close comes in at 60.90, the high close, and then 6105, obviously still that resistance range. So ideally you see this rally today, failure ahead of this to play some sort of near-term downside correction. Obviously this goes against what we think is going to happen in the euro per se, but with what dollar CAD's doing, I think it's just a good look to keep in mind as we head into tomorrow's Canadian employment numbers. So keep this in mind as far as Euro CAD's concerned. As close as you can get to a stop against that with a comfortable entry. It looks like you have the hallmarks of exhaustion. Momentum was deep in overbought territory, but you got divergence into a trigger break. Okay, when that trigger broke, We scuttled lower, came back, tested as resistance, then moved off again. So all things held constant, the momentum profile looks a little tired. If we get another hold below that 61 level, a stop against the high there might be a decent entry just to play the pullback here. Obviously, guys, this is uptrend resistance. So any type of counter trend trade you take, you'd be nimble, half leverage size, and pretty quick on it. Okay, don't get comfortable in a trade like this. Any questions on EuroCAD? These are both of the Euro crosses that I've been focused on heading into today's ECB, and we will be continuing to watch. Draghi says fiscal policy should be more growth friendly, sees room to rebuild fiscal buffers amid strong economy, structural reforms, yada yada. This is all fluff. All right, I think we got the bulk of anything new there. So, long story short, on EuroCAD, look for one more stretch and failure ahead of the highs. On Euro Dollar, if you get a decent pullback and a hold, the focus for the intraday chart is still on a break of the highs here. So, pretty clear picture on what we're doing in Euro. Number 3, let's take a quick look back to the index since we've covered the Euro so well. Here's what the DXY looks like. Not much of a change there. Okay, so we broke below the upper or the ascending median line formation we were following last week. We noted that 89.91 was our bearish invalidation level. So here's the rejection, and it looks pretty good. Okay, this is obviously, well, the level of which we marked as bearish invalidation. And here's what the last update looked like on DXY. Focus lower sub 89.91. Okay, so we kind of just came right ahead of that and turned right now. Now, again, if you're not already in this, we're at the weekly lows. A break lower from here, you're still looking for that drop to the 618. That's 89.28. And then the 2018 low day close. Keep in mind that the euro is breaking above its 2018 high day close. Here's the DXY still holding above its 2018 low day close, and that comes in at 89.08. All right, so pretty clean inverse picture here of what the euro has been doing. Break below trend line support. I like the failure ahead of that. Again, we're getting a little pivot on that former resistance, channel resistance off the highs there. Looks like you see a little bit of a hesitation there, but broadly speaking, you're still looking lower against that high we just made. Nice rejection at 60, ahead of 60 in the momentum signature intraday also looks pretty good. DXY, going once, going twice. So we've been following this one pretty closely. See if you can't get some sort of pullback here to get back in. Number 4 is the British pound. So here's what sterling looks like. Kind of kicking myself on this one. You guys know where we stand on the pound. Last week, we were looking at this descending channel formation. We saw the top side break, and we closed the week above that 37.65.85 level. So we were talking about that region for a while, right? That was pretty big. That was the basic objective opening range lows that you made for February. You had slope in there for the broader formation we've been following. Basic trendline support just from the November lows, 1 touch, 2 touch, 3 touch. So again, and on top of that was a basic 236 retracement of the entire 2017 advance. So right off the bat, that was kind of a key region that we were looking for as support. It was also the 618 extension of the decline off the highs from this year. Okay, so that 618 came in at 37.85. The 236 comes in at 37.89. So as we came into this region, this is kind of where things got a little bit, confusing, because if we were going to see a downside break, you'd want to see acceleration. And if we topside break, obviously the rebound. We failed to hold below. And as I noted in yesterday's piece, we closed the week above that key region. That's the tell. Okay, here's sterling on the weekly charts. So broadly speaking, on the weekly, we've basically been in consolidation ever since we made that raised ceiling back earlier in the year. Daily charts had us, again, failure to really close the week below there. This is where we close the week right in the middle of that range. And here's the top side pop. So for this thing to mark continuation or resumption, okay, if this is just the extent of the pullback within the confines of the upslope, then this is the level we basically need to clear. All right, so taking it back to the intraday chart, you made a breach of the descending channel. Great, you closed the week above support, came right back into it, start the week, rallied, broke, support, right back at that same level, 35.85, and that's what we noted yesterday as support. And here's the pullback right into it. So Mike, where do we go from here? Well, basically, as far as the sterling is concerned, if you're not long, there's nothing to do until we see what happens here at 30. It's basically 39.60 at this point. So if you're holding long exposures, I would be looking to take the rest of the trade off here. At this point, your stop should be break even or better anyway. And for new exposure, if this gets rejected, it might be another move lower. And again, we're still within the confines of the broader downtrend. Forget the fork, just basic trendline resistance off the yearly highs still has us governed by the downside here. So the breakout from here, sure, as we noted, shifts the focus higher, no doubt about it. 38.55, next level was right here. Earlier in the week, we cited 39.85, but as we continue to slope here, I just wanted to highlight this basic trend line. And if this consolidation that we saw, lower high, lower high, lower high, higher low, higher low, higher low, that break fueled the drop into support on the way up. There was resistance, same slope. And again, that converges on the same spot. So attacking this thing from here for any new exposure, again, you have to be on the sidelines yet. If you're in this, the levels are super duper clean. 39.50, a little dyslexic on Thursdays. 39.50, resistance, watch for a break there. If it fuels that topside move, I'd look for resumption. 41.23 would be the sort of the key resistance range to look for. Even if we move to the downside from here, 36.75, 37.65, 37.85, it's still going to be our bullish inval. It's still the bullish inval. And interestingly enough, if you take a retracement, and I was just fiddling around with this morning, if you just take a basic retracement to 618, comes in right around that region too. So basically, even if this thing spills lower and you get a larger break to the downside first, as long as we stay above this region, I want to stay constructive. Ultimately, the ideal play would be a reaction off this, either much stronger reversal for another kickback, or if we do breach, ultimately we want this to breach because the ultimate topside bias is still in play, in my humble opinion. But we can't get really comfortable on the long until we get that 39.50 pop. 39.53 is also the 38.2 retracement off the highs, says DJ. Off of this high, DJ, the yearly high. You are absolutely right, my friend. Yep. Let me get it to the proper high. 39.53. Yeah, you're absolutely, woo, right there, my man. Absolutely. Right. So even further conviction on it. So, the more evidence we have on those confluence spots, the better. Not bad. Thanks for eyeing that out. Let me leave that on there. Clean up that 618 for now. All right. So I'm just going to remove this for the sake of clarity. Clean the chart up a little bit. As always, guys, feel free to take a snapshot. I do see some new names in here. Welcome. If you ever need to take a snapshot, there's a camera button at the top of your go-to webinar screen. And it'll save a picture of the chart for future reference. Okay, so we're getting a sizable pullback here, guys. I'm going to segue real quick back to Euro. I want to see what this looks like. It's a big old reversal candle. Draghi says ECB decision on QE language change was unanimous. That's hitting all the different news headlines right now as sort of the main pull away. Draghi says ECB policy will continue to be reactive. Says victory can't be declared yet on inflation. There was, he says, there wasn't much discussion on other policy shifts. Incoming data reduced variance in inflation path. Says the ECB reaction function hasn't changed. So sort of backpedaling a little bit with regard to the comments made earlier of the omission of that language. And here's euro on the pullback. Nothing changes. Same levels remain in effect. But at this point, I think price is speaking here that there is still the risk. So I wouldn't chase this just yet. Yeah, nothing too crazy. You're still holding the basic Asia range. Maybe we do get that pullback to get back in. All right. All things held constant, we're still looking for a pullback to get in. All right. So that was EuroCAD and Sterling. Let's jump into Aussie Yen. You know, the Aussie and Aussie Yen both have been pairs that I've been watching very closely this week. I kind of like Aussie a little bit better. Obviously, that's been a tumultuous trade. If you're on the swing side of things, if you got stopped out, so be it. I actually jumped out on that rally after the webinar, guys, that I told you about into 78.25. But before we jump into Aussie, I do just want to go over from last night's update, Aussie Yen. So recall Aussie made a big old outside day reversal off the lows, right? Aussie Yen did not. So it's not quite as strong a signal, but there are a couple of things that we've been keeping an eye on. And we brought it up last night. First of all, weekly chart, right? Pretty clear on where we are in broader trend. This was the basic sort of basis, I want to say, for the initial trade to begin with, was the fact that we were coming into a major pivot support zone, and it's right here. It first got defined by the low that we made in 2015. Okay, it then turned out to be a huge pivot into the 2016 close. It ended up being the 2017 low and the low close, and that region came in right here, basically at 81.58 into 81.97. Okay, very objective. Obviously, this was a big support that we were looking for to start the year. We broke below that. The median line for the current operative slope broke, and that keeps the focus lower below this median line. So as we started the week, we were right at support. We talked about the risk for a rebound. The rebound came right into the median line, and that's still basically governing the highs. So the focus right now for Aussie Yen is still this key range. Ultimately, I do think it breaks lower, but until this range gives out, you can't make any assumptions on the resumption of the broader downtrend just yet. Okay, remember, we broke this uptrend, downside move, break of the median line keeps the focus lower, but you still have key support right there. So that was the premise of playing the rebound. The rebound played out. Where do we go from here? Well, the daily chart shows us coming right off that 2017 low day close. Again, the stretch lows were almost right on with the stretch lows we made here. Slope, basic parallel of that same gradient for this near-term pitchfork. Almost caught the lows precisely too. Here's the weekly rally failing right at down channel support. Now resistance, also pivot, just a basic 764 retracement, 786 retracement of the advance from last year's low. So this is your world right now as far as Aussie Yen. The focus for me, if this is going to move higher, ideally would be a hold above 82.46. Okay, if the rebound has a little bit more to go for a stab higher, maybe towards 84.38, then turn. If that's going to materialize, then pullbacks should be governed by the low day close. Now, yesterday, obviously, we probed well below that, then came back, but that's still the basic game plan. A close below 84.46 would put this back into the downside basic trajectory. But right now, this is the focus. This is the world for Aussie Yen. Here's the intraday chart. And here's what we looked like yesterday. Okay, so the daily chart, unchanged. Intraday, here's what we look like. Again, this is your resistance. It's exactly where we capped out the advance. So obviously earlier in the week, the first thing that we were talking about is on a topside run. Levels were 83.13, 83.38. Basic 236, once we affirmed that low, gave us 83.28, and we came right in the slap in the middle of that range, 33, before turning lower. So, basic slope line here, one touch, two touch, saw accelerations, been resistance ever since, converges all right there on a near-term slope off the median line. Okay, this is just off the highs that we made in December and February. Actually, both of these are December highs. And it continues to highlight that near-term resistance at 83.38. So this is your pivot. If we break higher, I do think, like I said, 84.38 daily chart suggests the same sort of level of significance would be the rally I'd be looking for. But one other thing, and I think Jamie might have been talking to you guys about this yesterday as well, is the initial advance off the low does look like a 5-wave affair. 1, 2, 3, 4, 5. Right, with the basic rules of Elliott, 3 being the extended wave, wave 4 not surpassing the highs from wave 1. So everything kind of looks and fits pretty good. You guys know me, I'm not huge on Elliott, but when there's a clear-cut directive wave count like that, it's kind of stupid not to pay attention to it. So that would suggest that you are for a little bit, we're in for a little bit larger recovery before a resumption. That being said, you got the BOJ on tap tonight. Obviously, you have big swings in market sentiment, guys. So you're going to see the volatility start to really come back here in Aussie yen. All things held constant, I think above the monthly open, or excuse me, the low day close. There's that pivot break that we were looking for yesterday. Above the monthly low day close or the yearly low day close, I think the risk is for a little bit more of a rally higher first. Again, it's run 82.46 rather. I guess I should copy it to the intraday chart. All right. Any questions on Aussie yen? Okay. To the previous update, dollar yen, Aussie dollar, and euro yen. Okay, so dollar yen. This thing hasn't really done much. It's been super stuck. I highlighted the fact that early in the week we kind of we came into support. We opened the week at support, initial resistance at 106.38. That's exactly where we capped out. And it was a very clean weekly opening range in that sort of little spot. And basically, that's still what we're doing. There's really not to do much here until this breaks. Ultimately, let's take a quick look at where the weekly charts are in dollar yen as we head into the close of the week here. So, the basic focus here has been this red slope. I think we talked about this on Tuesday. It was right here. Support, support, support. We're basically sitting right along it. There was a swing low that we made back in 2014. Has been decent governing here as a pivot. And that still highlights basically like 105.20. So look, divergence in momentum on the weekly chart, maybe. Which is why, again, the abomination, could see a pop back to that median line before moving lower. But ultimately, this was a pretty big break of a multi-month range. So are we going to get recovery first before we move lower? I don't know. Ultimately, I do want to see it drop into 103.40s. Okay, that might be a little ways out, but that's a big, big level. Basic slope, longer term. It's got the 100% extension, 786 retracement, huge confluence region. But first things first, we're kind of just riding that sliding parallel right now for the last 3 weeks. So the weekly chart puts things in perspective, right? You're looking lower, but would we be surprised to see a little bit of a pop higher first? Not really. So how do you attack it? Well, this is where the near-term approach, in my humble opinion, is the only way to play dollar yen right now, because trying to take a longer-term stance from these levels, I just don't think is warranted. So the weekly opening range, here's our weekly open. We talked about resistance at 106.38. That's exactly where this thing capped out. And we've been sitting in that range ever since, guys. So a clear-cut way to play it. If you see a topside breach, look for a rally towards the median line. That would take you as high as 107. Downside break, obviously the initial level that we talked about would be 104.32. But again, there's that 103.48 level on a subsequent break. So you can even start to look at this in the confines of, okay, well, maybe this is just making a near-term consolidation pattern, right? Bring it to a 60-minute. And certainly you could do something like this. Right? And if it's going to be, your typical triangle sort of continuation pattern, then you look for the top downside break to get you that final extension into 104.30. But even if it does rebound, like I said, the median line is your first initial target, and you can't really look much higher from 107 there. So it's like 100 pips on both sides, guys. So until we break out of the range, you can feel free to play within the confines of this area. But don't take a longer-term assertive stance, in my opinion, until we get a more definitive break. Because from the weekly chart, it shows that even if we were to spike lower and close back above, the risk for a rebound would still be there. So, we're trading in a lot of precarious spots, and I think that's okay. You got a really nice start to the month. Things kind of exploded right off the bat for the dollar. But I think you need to be cautious here as these things start to stretch to new, fresh yearly lows on a lot of different pairs. Okay, any questions on dollar yen? The BOJ is on tap. No surprise, this thing goes into the pre-central bank lull. So the BOJ is on tap tomorrow. Obviously, dollar yen, a big impact, or US data, typically a big impactor of dollar yen volatility. Keep in mind a couple of things. Heading into the NFP report, a couple of things to take note. First of all, we're expecting a print of 205,000. We got a previous read of 200,000. Look for any upward or downward revisions to that previous month's data because it was pretty strong. That's the first thing. Second thing, we're expecting unemployment to drop another 0.1% to 4% flat. If we do see that 0.1% drop in unemployment, keep an eye on the participation rate. As we always say, if the labor force participation contracts, that'll put artificial downward pressure on unemployment, and it'll look like, yeah, sure, 4.0, people might interpret that as great, right? But if there's a contraction in labor force, it's an inherent delusion of the number. So we want to always take that caveat. When I saw that the expectation was 4%, another drop, it's the first thing that comes to mind is, are we seeing just a labor force contract, or is it true participation returning to the employment sector? So keep that in mind. One other thing that we always want to focus on, specifically in the environment that we're in right now, is the average hourly earnings. That's wage growth numbers or wage inflation. You'll hear called, and that's really what the Fed's main focus is. As far as job gains are concerned, we're pretty much at the Fed's quote unquote natural rate of unemployment. Their focus has really been on stoking the inflationary picture, wage inflation specifically being the laggard. So, we saw a print of 2.9% year over year last month. We're expecting that to trim a little bit to 2.8. You can bet if this comes in at 2.9% or better, that you'll see interest rate expectations start to move higher as far as a fourth hike this year. That's only inevitable. Okay, if the inflation picture starts to rear its head and we're getting inflation specifically in the wage numbers, that's going to fuel the fire for more Fed normalization. So keep your eye on that. And again, just a quick note, labor force participation, the current print is 62.7. That's expected to hold. So keep an eye on that tomorrow. Obviously, like I said, big reactor for dollar yen. We've also continued to track the yields on the 10-year, and I just wanted to highlight that we're still holding 2.9 as resistance. We've been moving higher this week, but that key area of resistance, basic confluence slope resistance, has continued to govern the highs, specifically on a weekly close basis. And another thing that we want to pay attention to, definitely on the close of tomorrow's trade after the NFP print. And the implications, obviously, for dollar yen are as hold as well. Questions on dollar, yen, yields, near-term targets, any of that good stuff. Okay, that is number 6. Number 7, Aussie. I guess we should have jumped into this after the Aussie yen, but it's basically a very similar setup, guys. So yesterday we had talked about the pullback off 78.25, and in the webinar I told you guys that if we got into 78.25, I was going to take off half and go to break even. I did, and I got stopped out on break even on the rest of it for the pullback here. So there was another opportunity last night to fade that move. Obviously, hindsight 2020, I didn't take it, but here we are yet again. Is this fizzling out? Are we in for a deeper pullback before we move higher? I don't know. All I do know is that the momentum signature, again, bringing this into a close basis, does suggest that you're seeing divergence. Price action made a higher high. The oscillator made a lower high, obviously below the 70 threshold. If we take a basic support trigger just off the lows in price for the week, we just got a trigger break. So I don't know if the near-term picture is still going to favor that sort of outlook. We're going to keep the trade as is, but basically nothing changes as far as the levels are concerned. Here's what Aussie dollar looked like earlier in the week. So again, in the webinar, we talked about that pullback. We stayed constructive above 77.60, 77.62. This is the 618 retracement, the March open. Both of those levels, even more so than earlier in the week, converge on the lower parallel for the ascending pitchfork right here, and former trendline resistance. I kind of removed it from here because we were probing that region right there as we were talking, but basic trendline resistance, break fueled acceleration, support bounce, all right here. So game plan remains unchanged, levels remain unchanged. Aussie was coming into a huge sort of support level. And again, looking at this from the weekly standpoint, I guess we could do it on all time frames. Huge level, right? Basic swing highs from back here in the first quarter of 2017. Pivot, break, support, 52-week moving average. Okay, probing the 200-week moving average. All right, so there's a lot there. And again, a basic parallel of the same slope we've been following off of the lows from 2016. So right off the bat, we opened the week at support. Very similar to where the Aussie yen trade is, right? And again, the daily chart, 2016 high day close. This is the high day reversal close. That was 77.35. 618 retracement at the near-term advance gave you 77.43. So things look clean. We're just testing former channel resistance or former trend line resistance or support as resistance. Again, could get a little bit more of a pullback, but if that near-term formation is in play and the 50 line has already caught resistance, then we should be looking to stay constructive here above 77.60. What are currently at 2018 opening range low? Is this level that carries much weight? We are currently at 2018 opening range low. Trying to visualize what you're talking about here, DJ. You're talking about 2018 opening range low for Aussie? Set on 1-1. Yeah, so this is the thing. I wouldn't necessarily call that the opening range low for the year, DJ. It's by all means, for sure, it's the yearly open, so inherently, absolutely, I'm watching this level right here. Yeah, basically it's the 78 handle, right? We opened the year at 78.01 to be exact. So the yearly open I'll watch, but I wouldn't really use that as an opening range low for the year. Why? Remember, when we're looking to ascertain opening ranges, the whole point is to watch what price action does, not time. So the fact that we came into that low and then we probed through it and rebounded, and on 2 separate other occasions we probed through it, right? So if anything, DJ, I would be counting this as the opening range low. And the fact that we haven't really made a close below that one dribble, below that region, that would be a little bit more of a key range I'd watch. Remember, when the market opens a month or a week or a year on just a simple stretch, yeah, you want to look at that low, but trying to ascertain that as an opening range low for the year break, a little bit tight. So remember, the opening range for the year can take as much as the first quarter. It's March, right? So DJ, if this recovers a little bit higher, the actual opening range dictation for this year would be this stretch, basically the February decline. He says, okay, understood, thanks. Right on, right on. A little bit trickier with the yearly opening ranges, but I love that you're watching the open, absolutely. So you are coming into support around these regions. You also have the 200-day moving average right there, right? So sure. But again, even here, you're seeing momentum. Price action made a lower low. The oscillator did not make a lower low, so not proving a new extreme in price. So if anything, the rebound is kind of what my focus still is here on Aussie. It's a little hesitation. Markets don't always just go in V format, but all things held constant. And that's still kind of the basic premise. Any questions on Aussie? Good question, DJ. Okay. Moving right along. That was Aussie dollar. Euro yen, number 8. Okay. Euro yen looks like this. And here's what Euro yen looked like earlier in the week. So Euro yen had made a big old outside day reversal on the daily chart right here, I guess, right? So looking at it, right off the lows, right? Very, 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 very clean rebound. This is just a basic former swing low from September of last year, but you also had the 50 line for the current pitchfork formation that we're in. And that confluence region, obviously, like I said, big outside reversal day off that low. We're inherently looking for that rally towards 130, 170. Basically, that's where we've been holding as resistance ever since. Here's the intraday chart. Again, what looks to be a possible five-wave affair, 1, 2, 3, 4, 5. You look at this consolidation that we're in right now. Even if it were to break to the downside, the basic premise of the trade or the basic emphasis would still be the risk for a topside move here. So for Euro yen, you were looking at this, Pooja, and we were kind of following this all week. It's been a tough call since here, right? We've been holding that median line as kind of resistance, really messy. DJ, to go back to your comments, we're talking about the yearly opening ranges. The weekly opening range here, that's your weekly opening range low. That would be your weekly opening range high. So, basic Monday, Tuesday stretch is still the range that we're trading in 2 days later. So heading into the end of the week, the basic emphasis is if we do see that topside break, I would look for a move towards the 50 line. That basically gets you the 133 handle. Soft target at 33.40, but the upper parallel comes in beautifully with the 618 level, and that's like 134.40. Might be wishful thinking. That's a whole lot of yen weakness to kind of press that. But with what dollar yen's doing, very low conviction trade on that front. So I wouldn't be too surprised here, and it would bode well for that euro strength that we're looking for. We just need this thing to kind of clear out this near-term consolidation. And that's what the trade looks like. So ever since that turn off resistance, right, we've kind of just been consolidating below this region. All levels remain unchanged. 130.15, the weekly open, that's still what we're going to leave basically as our bullish inval on this bounce. But even the momentum profile looks pretty decent, because if you look at this kind of on the 120-minute chart here, on that downside break, this was your 60 hold as resistance and momentum into overbought. You now pressed above 60 for the first time. This is the highest momentum reading you've had since the highs, right? And then on the pullbacks, you're finding some support around 50. That's as bullish or as constructive as a momentum signature as you can find, right? So all indications to me are still that you could possibly see this thing break higher. Maybe just waiting for me to stop watching the 5-minute chart, says Pooja. Like watching paint dry on Euro Yen. Hey, it's the abomination. It's what it does. It lulls you into a false sense of complacency. You know, make sure we're staying disciplined. We have our risk reward set, our stop and our limits in note or in mind, and let the market do what it's going to do. But I hear you, Pooja. This is not the most exciting thing, to say the least, especially if you're watching the 5-minute chart. But all things held constant, I still think we're on the right track. I don't think there's anything here that would upset our basic premise from the trade since earlier this week. So let's see if we can't get some juice out of this rock. Okay, so that is Euro Yen. Next up on tap is dollar CAD, number 9. So dollar CAD for tomorrow. Got the CAD employment data released at the same time. CAD employment is expected to hold at, or unemployment, I should say, is expected to hold at 5.9%. Expectations are for the addition of 21,000 jobs for last month. Remember, the previous month's print for CAD employment showed a contraction of 88,000 jobs. Caveat: Canada employment is known for these massive swings. So 88,000. Well, yeah, it's funny, just kind of like giggle at, but it's not that big of a surprise. Let's just put it at that. So that being said, right, the fact that you have a big event risk basically on both sides of this trade with the dollar and Canadian employment numbers out at the same time. Here's what dollar CAD looks like first on the weekly charts or on the daily charts. I guess I showed the weekly charts first. So the weekly chart, the one thing I wanted to note here, 29.27. Remember, we talked about that level at nauseum. It was the 50% retracement of last year's range, so the entire 2017 range. But it was also the late December high. We made an outside weekly reversal off that level. It was the previous October highs. Okay. And if we close the week below this, guys, that would be suggestive that we have a near-term exhaustion trade lower. Momentum is right into 60 on the weekly basis. Okay, so ever since, just look back in price, guys, on the momentum signature here. I know we're getting this trigger break to the upside on this move, but just look objectively back at the momentum signature. We haven't really seen any substantiated breaks above 60 since the highs that we made in 2016. Right? Last time was back here. Ever since then, we've more or less held 60s resistance. So if we're gonna fail, if we close the week below 29.27, in my humble opinion, again, that would be near-term pullback. Even if we were to spike as high as 31 here, there's a lot there. Basic channel extending off that high, parallel converges. The upper median line parallel for both this pitchfork and basic trend line resistance, and the 618 retracement of last year's range. So for me, I'm not going to chase dollar CAD higher. I'm not going to, necessarily try to fight this just yet, although Euro CAD, like I said, is kind of coming into a big region too, but something to keep an eye on, especially into the weekly close. Now, heading into tomorrow, here's what the daily chart looks like. The January low day close from last year that we talked about, which was like 30.26, just below that 31.30 level, converges on a near-term slope off the lows. Boom, boom, boom. Again, the 50 line was a perfect reversal and vault into the highs. The break of the upper 50 line took a couple of days, but once we broke, acceleration. And this is why at the start of the week, we were looking for maybe a kiss of this level for a pullback. Ultimately, the monthly open comes below that 50 line. So 28.29 would be the break that would suggest you got a larger correction at hand here for dollar CAD. So, these exhaustion trades where we're trying to look for a market peak, guys, you have to be prudent and you have to play it slow. Not kind of trade where you want to try to act as a hero and just try to short this, but ultimately that's kind of the focus for me. Is I think you look for exhaustion into 30.27. If you get that pull higher, or if you break below 28.30, you'd look to play the correction. And then in that such a scenario, you're basically looking for a region down here, basically the 50 line, 200-day moving average. In a couple days, the 100-day moving average will be up there. The median line will be in that region. So sort of like this spot right here. Failure into overbought, possible. Here's what the intraday chart looks like. Okay. So again, these consolidation plays right next to resistance, you know, you're making basically equal highs here. Could be, I know that people are gonna start calling double tops already and all this nonsense, but same game plays, okay? Same setup. If you get the spike into 30.26, watch. You have that upper parallel or basic channel resistance just higher. So even if it spikes through on maybe a real big variation or a deviation in both employment data from Canada and the US tomorrow, if we get that spike into that region, I'll be looking to fade it. Obviously, if we get the break below the weekly open, more important, like I said, the monthly open here, look for a drop towards 27.23, and I think that's kind of the break zone for me. So dollar CAD coming near resistance, you know, it's got a very clear and well-defined weekly opening range. So again, kind of drill home the opening range ideas today, TJ. Here's your weekly open, right? You set a high. Once you test the weekly open as a low and rebound, now that works as the weekly opening range, right? And certainly it tested the highs, failed, tested the lows again, failed. Really puts the emphasis on a break of this near-term range. But certainly the exhaustion trade in dollar CAD, you guys know we've gotten stung on this a couple of different times. So same type of play that we're looking at basically with Euro CAD. Questions on dollar CAD heading into tomorrow's double whammy US Canada employment release. Number 10, just really quick, Euro Key. This is something that we talked about earlier in the week, but I haven't really been actively following it. Here's Euro Kiwi at this point. So dollar CAD, same levels, right? We're looking for failure ahead of 30.26. We basically got it, but levels are basically remain unchanged. Euro CAD or Euro Kiwi looks like this, right? So we were opened the week with a very clean range. 170 was basically support to open the week, and the resistance range was 70.84 into 71.13. It was a bigger range, but both pretty significant levels. You had a 618 extension from the ascent off the lows and a 618 retracement from the decline off the highs. Here's what Euro Kiwi looks like now. Okay. So I thought we were going to get a break here earlier today. I got excited. I thought I'd have something to show you here in the webinar, but obviously we pulled it right back on that Euro pullback post ECB. So the weekly opening range remains intact, right? Just below resistance. So bullish invalidation is basically still the Euro, or excuse me, still at the monthly open. That's 69.30. That basically converges on the lower parallel here for this slope. You know, ultimately, if we were to drop, I'd be looking for entries there. But I do like this pair higher. It's just been unable to crack this basic pivot range of resistance. Former swing lows, break acceleration, resistance, resistance, resistance. Looks like we just got another failure. So this is a good segue actually into your question. Iman, was that you who we wanted to look at Kiwi? This is my problem with Euro Key and why I kind of fell out of focus this week, because even if our Euro base case scenario works, there EuroCAD breaks the European lows. Does it? Let me see this, Pooja. Looks pretty good. Yeah, that does look like the failure. That was your entry right there. So kind of just some preliminary near-term approach right there. 59, watch as that as a region of support and a 2 equal leg stretch off the high. Comes in on a parallel there, just right around 59 handle. And obviously, you know, let me just give you an objective measured move. If we do break that low, I'll give you an objective target down here. You got 158.14. Yeah, see if that slope holds. See if that slope holds, but it does look good. It does look good. Stops to break even now, says Puja, shorted at 60.25. Not bad. Very nice. Very nice. Yeah, I'd have it at break even at this point. I mean, even that's kind of playing it close to the chest. Pretty much against the high would be the best play. But yeah, since you got it a little bit late on the entry, yeah, put it at break even. Look at 59.66 as a soft target. And Puja, this is how you assess through the move, right? If you see some interruption at 59.67s or 60s, maybe take a little bit off the table since your stop's at break even already. I'd hate to see that just take a recoil back. But ultimately, the ideal target would be the 59 handle, 59.05 to be exact. Again, just my personal humble opinion, Puja. Good job. Says yes, thanks. All right, right on. So, Eman, you want to take a look at Kiwi, right? Here's my take on Kiwi. I don't like that it broke the underbelly of our slope. It broke the upper belly, broke the top side of our slope. We've been sitting that in support. Let me clean this chart up a little bit. Give me a sec. Let's see here. Well, 50 line hasn't been super clean. Not that impressed, but certainly on a stretch like that. You probably just hit the 50, yeah. So it's a tough call on this one, Eman. I'm going to tell you, this is just from my opinion. It's a low conviction call just because based on what the price action did. You know, first of all, we never cleared the February opening range. Here's your February open. We set a low. We tried to test the highs. We even ripped through it and pulled back. So basically, the February range is preserved, and you're more or less in the middle of that range. So just from a basic positioning standpoint, I kind of don't like where we are right now. So here's Kiwi, Eman, here's Kiwi on the weekly charts, right? Same thing here. You're sitting, you have been sitting on a closed basis. Let me bring this into a line chart real quick because it's been a lot of wick action, but look at that. On a closed basis, the 200 long-term weekly moving averages has been ridiculous support for all these pullbacks. So, you know what I mean? Like, I would like either a move into support and look for a reaction here. You got the 52 week, you got a 50% retracement of the advance, you got a whole lot of good stuff, former slope support. That might be a decent entry. Obviously the breakout above 75, 17 would be needed to mark resumption. At that point, you'd be looking for 78. But until we get out of this region, this thing could just continue to chop more sideways. I really don't see anything here pressing that's getting me excited. There was 2 days this week, or actually it was right here on this advance, where actually Kiwi was the top performer versus the US dollar on the entry of US trade. Since then, it's been a chop fest. You know what I mean? So look, objectively, if we clear 73 to the upside, sure. I think you get a larger pull. Look for a rally towards 74 again. If we break below the low day close, 72.17, probably going to see that 71 drop. All right, so like here. If we clear here. So, add to that the weekly opening range is intact and you're right in the middle of the weekly opening range. There's just too many things working against me in this one, man. You're slap in the middle of the weekly opening range. You're in the bottom quarter of the monthly opening range, and you don't have any clear weekly structure. So for me, it's kind of like, you know what I mean? Wait for a clear-cut definitive break here of some sort of range. Till then, it's low conviction. E-man, does that help at all on Kiwi? I wish I had a little bit more of a stronger opinion, but at the end of the day, we have to take what the market gives us. He says, got you, Michael. As you said, it's a tough call. Yeah, I'd rather be in a trade I'm a little bit more excited for. I'm just waiting for the levels, where for this one, you're nowhere near resistance per se. You're not really near support. You're in the middle of the weekly range. It's just an ugly setup. But if you had to put a gun in my head, I'd say watch 72.17 as key support. And if you clear 73, I think you do get a larger resumption towards the February open. Okay. Guys, if there are no other questions, really quick, gold, just wanted to give you an update on that. That's still making very similar kind of headways, where you're seeing headwinds in the euro and the DXY. We talked about the breakout. Big resistance crunch here, 1339, 618 retracement, channel resistance, the pullback. I still want to see if 1316 holds. As long as price holds above that, I'm looking for a low to buy. So just keep that in mind for the gold trade on the pullback. If we do see some strength in the dollar tomorrow, if we drift lower in prices near the weekly opening range low, that's also the low day close so far for the month. Look for a reaction on a move into 316. Chipped a portion of that Euro CAD at 59.63, monthly R2 here as well. Thanks again, says Pooja. Hey, Pooja, you're doing the trades. I'm just helping you find the market's levels. Well done, and good luck on that trade. All right, guys, we'll wrap it up here. Best of luck trading tomorrow. Again, don't forget that both Canada and NFPs come at the same exact time. I will definitely keep you updated on that Squawk Wire. Also, quick note, I will be doing that Foundations of Technical Analysis webinar on Daily FX at 10:30, right before I leave for Vermont. So I'll be looking forward to seeing you guys tomorrow. There won't be an update on Sunday night because I will be out, guys. So the updates will start for the intraday trade page again on Monday night. Till then, best of luck trading. Pete, same to you. Have a great weekend, guys, and I'll see you next week. Cheers.